The broadcast is now starting. All attendees are in listen-only mode.
All right, good morning, everybody. How's everybody doing today? I am Todd Groskreutz. This is Disruptive Traders TV, Power 62 session for October 30th, 2019. Welcome, welcome. We will take your questions today. So it drives our sessions. All right, let's get this out of the way. A few other people jump on. Risk warning and trading disclaimer. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors or traders. There are no guarantees of profit, and most Forex traders lose money trading. Past performance is not indicative of future results. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should only invest money that you can afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts or uncertainties. This presentation and all of its content, including past trades and potential trade setups, is for educational and informational purposes only. Using any strategies, techniques, or software mentioned in this presentation is also risky. We make no guarantees of profit of any kind. The presenter is not a licensed financial professional and therefore will not give any financial advice or recommendations. All information in this presentation is our opinion and may not reflect the truth or reality in the world of trading. Please use your own good judgment and seek advice from a qualified consultant before believing, accepting and acting upon any information in this presentation. This is not a solicitation to invest. Hypothetical performance results have many inherent limitations, some of which are described below. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or to adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in the preparation of hypothetical performance results, and all of which can adversely affect actual trading results. There you have it. If you haven't seen it before, take a screenshot of it. Looks like most of us in here have been here before. Let's see, what do we got? It is Wednesday today. Don't think this is going to go off today. Mackenzie's been out of power for like 4 days. She lives in Indiana. They had some type of storm. There's transformers out. She was hoping to be back online on Friday. From what I saw, Stephen Ma, is this the updated schedule? Yeah, I don't know if this is going to go or not, so keep an eye out for this. He's doing some traveling. But today we've got myself, we're right here. And then we've got Clay Taylor with Advanced Waveology later in the day. And of course, the sessions are posted in the archive. If there's something, one of the particular sessions, whether it be pitchforks, harmonic scans, Charlie Delta, some of the waveology stuff, which if you're trading with, especially tab 29, very important to understand. Probably one of the main keys to understanding which trades you should be taking, what price may or may not do in the future, etc. So it's a key that really unlocks tab 29. All right. What do we got for questions today regarding Power 62? So we've got harmonic targets. We've got the 62 EMAs. We've got the 513 62 crosses. We've got a .382 Fibbo after a cross. Questions? Good morning, Tim. We've got the other 62 coach on today, too. No questions? Wow, this could be a quick session. Might be the record. '62 is middle of the road. Regardless of what you're trading, it's nice to know where you're at. Because price is always going to come back to that 62. May go through it, may bounce off it, may go through it a little bit in reverse. I missed the 382 Fibbo. Can you please explain that? Sure. So in the higher time frame, or all time frames, harmonic target training, Steve mentions this. It was it's in the archive, or if you search on in scans, forks, and Fibbos on ATF, he did like an hour-long training when he dropped that indicator. It was on May 3rd, I believe. But I have a chart here. All right, Craig, just watch this. I'll cover some of it here. I think you'll pick up on it. All right, so we're a little wicky here, but there was a good move in here that I wanted to show. So first of all, you have to figure out, okay, what am I trading? And I like to trade a 5-minute wave where you're actually stepping in, you're entering on with a 5-minute move, but you're stepping into a 30-minute wave. So if we look here, we see our higher time frame waves. This is tab 29. If you have just fast 33, you won't see this. I will put fast 33 on here, but we see that the 30-minute, all these waves are moving up, and the 30-minute decides to pull back all the way, and then it's turning around. And its bottom is right here. Now we'll also note that the 30-minute harmonic targets, and Craig, to your question, listen to what's going on here, and then look up the training that Steve did for the HT-ATF indicator. He does a really good job of explaining really what's going on here behind the scenes, based on his decades now of research on it. But we bottomed out here, which on the 5-minute chart, and note at that bottom out, we're walking up through the harmonic targets. These were the current targets at the time. So we had made it almost to the 72, and now we pulled back past the 55. But our higher time frames are still moving up. So try to trade with the 30-minute impulsivity. So essentially this is a strong retrace extreme, we call it. Let's look at this on the 5-minute. All right, so this is that bottom right here. And we see this is the 13 EMA. This is the 5-minute 62, right? In purple. 13 EMA, we always put it in yellow. It will correlate very close to the 1-minute 62 as well, but not really relevant in this case. So if we look here, our 30-minute wave is the blue wave, and it's rolling up, steaming up from this low that it made. And we make a 5-minute cross. So if we could have an indicator, an alert on our charts that would say, hey, tell me when the 5-minute crosses. So we get an alert here. Cool thing is we don't have to be like, hey, we got to trade right now. We've got time to take a look at what's going on. A little bit of waveology here. If we look, the 30 minutes coming up strong, but the 10-minute and the 5-minute come up here, make a little bit of a reach, or I should say like a snake, basically, as they pull this price up. And then the 5-minute decides it's going to pull back. Now, I know I've said in previous sessions that I'll generally wait for the 5-minute to go to extreme. There's a good chance that this reached down in real time if you have an indicator on peak 5, the peak, basically the 5-minute wave reaching like 20. A lot of times it'll just reach down for a second and then pull back up. Regardless, this one move, just where this, it's like a shoulder, right here, hitting this 5-minute. Sometimes it'll be the 1-minute. Sometimes it'll be in between. There's a 3-minute that sits in there. If you wait for that one move right there, and if we put the Bollinger Bands on, this would be a Bollinger Band hit for those who trade or know about the clay way. I've been through the training on that. So this makes for a great entry. Now, as we move up the way, this is a 5-minute hook back on a 30-minute snake. You would think that would be a strong entry. Once you get further in, you don't know how far back these are going to pull or when the 30 minutes is going to pull back out, right? But generally, the first cross after a 5-minute that pulls back to the 1 or the 5 or somewhere in that area is very strong. But the question we have is how far is it going to go? What can we reasonably use to figure out our reward risk, right? Because we want to have an idea, okay, if we're going to get in this and have 3 or 4 pips at risk, can we ascertain an 8 or 10 or 12 pip return? So we get a 2-to-1 or a 3-to-1 return. So in this case, we can measure from here to here, which is 9.8. And the reason I'm measuring from there to there is because this is a retrace extreme. Those that, some of you in here have been through tab 29 or Shredder. Essentially, this is a fan retrace. Or let's just call it a retrace extreme. So a high percentage of the time, price is going to go to a higher high, or at the very least, make a double top. So this is not a 30-minute one, it's actually a 10-minute fan retrace, where the 10-minute came in, made an extreme, and we're pulling back against it. So we can look at it and say, okay, I'm 3 pips in, and I'm looking at 9.8, let's call it 10. So almost, or basically a 3-to-1 after spread, maybe a little bit less. So that's awesome. That's a good return. Steve talks about this being at least 8 pips. I won't go into the ABC. Occasionally you're going to get in here. It's going to go up a little bit and it's going to pull down a little bit further, especially if it's short of the 5. 5 minutes 62. It's going to happen at times. When it happens, you exit this trade and get back in a little bit lower. So Janelle's question was, explain the 38.2 Fibo. So if we take from this low, the start of the move, right, and we go to the 5-minute cross, which was right here. So where the 13 crossed the 62. And we drag this Fibo up to 38.2. In many cases, again, I say it on every session, the Forex, nothing in the Forex is 100%. But in many cases, price is going to get up to this level before it really meets its first major resistance. May reverse there, may go further as we saw, but generally that's, if you pull this Fibo on that cross, and you can, he was doing it on the 30-minute 62, but it works on the 5-minute also. It's fractal, right? You could do it on the 10-minute, you could do it on the 15, but it's another way to say, hey, if I am trading this right here, if this line's right here, then I'm not looking at a clear path to 10 pips, if you will. And so it's something that probably not going to, depending on what your trade criteria is, you might be like, no, I'm not interested in that. This little setup happens frequently. Most pairs will do it at least once or twice a day. Like I said, you look to trade with the 30-minute wave or with the harmonic targets. This was against it right here. See how this whole scenario ended up being a lot shorter. Not to say that there aren't pips to be made in there, but your probability of a larger burst move, longer move, is going to be when you're with the harmonic targets, with the 32, only exception being when it's turning over. But that doesn't happen overly often. So if we look at the 1 minute here, it was a direct slam basically. There's the 1 minute. Oop, that's not the 1 minute. So it depends on what your poison is here. If you're POT trading, you could POT trade this. It pulls back to another extreme, jump in another POT trade. You can trade it on a 5-minute trend bar. But we're looking at it and saying, okay, very high probability that we're getting to here, and a decent probability that we're getting to there. So if we achieve this and we get above there, we could lock in if we want. We could do 40% at that point, going for this. To me, if this is 10 pips and I can achieve that, I'm not giving that back. over, oh, I may pick up, a few more. It's also a great way to step into, right here, we're stepping in basically at the harmonic target 55, which went to the 110 in pretty short order. It's really nice if you're stepping in down around, price pulls up. We know a lot of times when the 30 crosses, you cross, it'll pull up to the harmonic target 21, pull back to the 30, check it, and then take off. A lot of times you can step in right in this area. And if you want to be a swing trader, that's a great spot to ride that, an easy spot to get in. So that's the 38.2. Let me go back. Sometimes it's the .50, but if you use the 38.2, it just gives you a good guidepost, if you will. That's the 1 minute chart. And sometimes, like there was a GU trade yesterday, the pound, that from entry, it was 40 or 40, of course it's, Brexit, right? I don't trade it. I've been watching it. But it's, it was from the entry to this line, it was like 45 pips. And it made it and then some. So, and it's something you can go back in time and back test, because the EMAs and the candles they don't change, right? So it's not going to be a repaint situation, if you want to look at it. Again, nothing's 100%, but it kind of gives you an idea, hey, where might we go to? So hope that helps. Good morning, Todd. When taking trades off the 5 minute 62, do you always wait for HWC, or would you also take the trade there is no HWC? So I touched on that just a little bit there. I've really been trying to zero in on just that. Because you get to where, Steve did a post, and I've mentioned it before, but it's probably 2 months ago now, and Scans, Forks, and Fibos on trade the same thing, the same support and resistance, the same spot in the chart, if you will. And this is going to happen over and over. And I love it when this pullback happens in like 5, 6 candles like this, right? It's a strong pullback. And like I said, well, let's see, let's replay it. It's, not sure if this one did or not, but we'll see. So we see the 10 minutes kind of making a little bit of a snake there. A lot of times that'll be a 3 wave. See how this is extended here. Yeah, this one I don't think reaches all the way down. No. A lot of times right here, you'll see that in real time, it'll reach down there for 5, 10 seconds, and then it'll pull back up. So if you look at it on a reloaded chart, you never see the extreme that happened. But this one, solid Bollinger Band hit. Obviously, again, it hit the Bollinger Band here, but we got to wait for that retrace extreme to end. So if we're looking at it on a 1 minute chart, you want to trade this with a 1 minute extreme. This doesn't quite hit extreme here. Here it does. So this whole time we don't hit extreme until we get down here and we get our green bars. Machine's a little laggy today. So we're in that trade in 2 pips basically. Are they all that smooth, and tag the 5 exactly? No. But we know it's almost like Bobby and Joey. Hold on one second. We're going on a road trip. And now it's reloaded. Well, we'll look at it over here. So Bobby and Joey are going on a road trip. They start here, and they want to go to here, and that retraces right in here. And they take off. Let's look at it on the 1 minute. Bobby and Joey are going on a road trip. They take off. They're like, oh, this is awesome. It's fun. They get to here, and they're like, oh, crap. We forgot Billy. And they said, no problem. We'll send somebody back to get him. So somebody runs back to get Billy. And they're like, we're going to keep going. You catch up. And this is the catch up right here, where that 5 minute wave is behind, and it's got to catch up with the 30-minute wave. We see it in the waveology. It's almost like a rubber band or a slingshot, like pulling it back and it takes off. So in that particular instance, no, I will not wait for the 5 minute to go extreme. But that is the only particular instance that I'm pulling the trigger on right now. And if I trade a morning session, London, New York overlap till New York close, I'll see it 5 or 6 times generally with the direction of the harmonic targets. A lot of times it happens after the news happens, then price figures out its direction for the morning. It takes off, which is awesome. It's showing its intent to make it a strong move, and then when it pulls back, then we're standing there waiting for it. All right, let's see what else we have here. No, I don't have the 5 minute 62 on a 30-minute chart. I have the 30-minute 62 on all my charts. There's no 5 minute here. All right, any other questions? Is channel size the only reason you would trade against the 62? Like are you referring to the 30-minute 62? Right now, I don't trade against the 62 at all. Just easier. It's you don't need to catch every trade in the Forex. So You need to set parameters that work for you and what you want to accomplish. Technically, that trade, I don't know if you noticed either, if you're a tab 29 trader, in real time, this was more than likely a buy into the sell. Other than it came from a 10-minute harmonic wave convergence, not a 30. But you look at, the 30 minutes. Well, what's important here is that while this was pulling back and the 5 was pulling back, the 30 was still going up. So it's patience. It's waiting. If you look at a chart, when this does this, you're going to see price rolling up, right? And then whether it's 10-minute or 5-minute, and then when it pulls back, it's going to make a reach move. It's going to be a triangle almost every time. That's this move right here. Fractal, put it on any time period you want. It's going to do it over and over and over. It's easier to see on the 5-minute, 10-minute, 1-minute because the waves are, they're not smoothed out like a 30-minute wave is. But you're going to see it over and over and over. And that's some of the MacGyver looking at what's really going on. And everybody's RAS is different. Everybody's risk tolerance is different. So what you see, what you look at a chart and it's just glaringly, obviously apparent to you is not necessarily going to be the same as what other people see. There are some truths in there or things that Steve has found and taught us that, hey, when this happens, here are the odds of X or Y happening after X happens. But it's just a matter of finding that spot in the chart, and that there's a relationship between the 5-minute wave and the 30-minute, the 5-minute being the sub wave, if you will, of the 30-minute. It does a good job. If you've been through Shredder, which not many of you have been, they taught, Steve 10 years ago, 7, 8, 10 years ago, when the 5-minute wave went to extreme, pullback to extreme against the 30-minute wave, that was the end of that 30-minute retrace. So that's that relationship between the 5 and the 30. Yes, I was referring to P10 snaking at the top, showing signs of upward pressure. Yes, right here. So it rolls up and then it stays in there. We're on a 1-minute chart, so it's kind of short. Let's take it to. So generally, I'm using the one for education, for execution only. Not as clean, but another example. 30's coming down. Here, 30's still pretty high, and I haven't crossed. It pulls up. 1, 2, 3. If we notice here, the 5 is real close to the 30-minute 13, right? So technically here, we're in green, right here, we're in green 30-minute harmonic targets. But this is getting close, right? We're getting close to crossing down. So I will watch this one knowing that. That's the only exception, is if I'm getting really close to a 30-minute cross. We put the 38.2 on there. Let's get rid of this one. So we see from this cross right here, good chance of getting down into this range. This first one I'm not on. Can be if you want. In real time, this is going to be a 10-minute harmonic wave convergence, 10-1, with 30-minute not an influence. qualified trade. Actually, the trade Steve asked you to learn on, right? That's the reason for it. Essentially, it's the two wave, if you will, of this 30-minute move. And we know that generally you're going to get a 1, 2, 3 or an ABC, one or the other, that are shaped the same. So once this pulls away and it's lower than this, good chance we're going somewhere. We get a cross, we get a pullback. A little earlier than I like, but I'm looking at this where the 10-minute hits, and this time you get a nice strong pullback, which would have been extreme in real time. We're able to get in here. Another money management possibility, right? Trader's choice. Trade it till the 5 crosses back over. It did right here, actually, so you'd be out up here. Sometimes you'll capture the majority of the run that way. You can put a 40% trailer on that. If you did, you'd get taken out here. So different options there. Yeah, we see that. This one was fairly quick. It just kind of came, but it came down and made a harmonic wave convergence and then pulled back against it. And that while this is pulling back, and of course reloaded waves easier to see, right? But the 30's still moving down. It's nice. Here, the 4 hours in the power zone, so it's not a big influence. It's nice if it's laying down here, then you're trading into a 4 hour as well. If it's up here, first of all, if it's up here, you're going to be in solid green harmonic targets. That's why I'm not taking that sell, because what happens is when the 4 hours up here, that's when you see those 30-minute ones that go down to here. The 10-minute makes an extreme and takes off, makes a big move back to the 4 hour. It's a 30-minute retrace extreme that doesn't get all the way down. It's that 80-20 with a 30-minute wave. You get a little bit of waveology there, but that's when and why that happens. So if you trade with the harmonic targets, which here by this time, we're right at the cross, basically. All right, let's see what else. Yeah, it's waveology, 100%. But it's exploiting it, right? So when I look at a chart, I get an alert here. I look and I see, okay, 4 hours. Really, it's a 5-minute wave. 4 hours, not that big of a, especially if I'm trading with the HTs, right? But I see a 30-minute high and 30s rolling down. And once it gets this far, generally, like I said, unless the 4 hours laying up here, it's going to make an extreme. 10-minute makes an extreme, pulls back, way you go. All this here, not interested. Is it making moves? Yeah, it's a little wicky. Not great big moves, but it's making moves. So here, this pullback from here, 50 to 56, not overly deep. So just making a lower low, basically slushing a couple. But with this Fibbo here, we're like, okay, good chance we can get down to this area. All right, any other questions? If you haven't watched the harmonic target all-time frame video, go watch it. It'll help a lot with what explain kind of behind the scenes of what I'm talking about here. It's in scans, forks, fibos, and waveology. A little over, not much over an hour if I remember right, but Steve does a great job of kind of explaining the background and then the tools that we have here. And that's not even, I didn't even really get into the 5-minute here, what it's doing and the power of what you can do with the 5 minutes. It just kind of takes it to another granular level. Yeah, the 62 is cool stuff. Thing is, it's there every day. I mean, it's, again, you got to pick the time period you're working with. But it's not something that's like, oh, 62 today, not tomorrow. It's always there. And the 5-minute cross can be the beginning of a very strong trend at times, because it basically takes the 30-minute, like a 30-minute one wave to make that cross. Like at one point here, we're still against the targets. This is one of those situations where there's going to be a cross in here, but I'm not interested. I'm still too far away. You start getting in this area, and then I'm interested now. If you look, this is on a 30-minute level, right? Price comes in, only went up to the 8, and it pulls back, and then it takes off. Now, whether it's in here, somewhere in this area, you could step in with a 5-minute move. We see the higher time frames jetting up, right? If you step in there and hold at 98.65 essentially, you're still in that move at 99.70, 110 pips later, 105 pips later. That's the power of the 3-pip stop loss. Really, what the real intent is to get you in, or even in true waveology, get in this daily bottom right here. Waves are reloaded, so they're a little choppy. But to get in here with 3 pips and still being up here 140 pips later. Because there are no major pullbacks in here. This one, 72 to the 55, no, you'd still be in there. If you're using the old school 62 money map that they used to trade before they had waveology, and it still is a relevant. There's a reason these harmonic targets are here. Steve explains in the video why how he came up with them. But price does move in a certain, if it's moving per a Elliott wave move, a typical Elliott wave move, the right stop, hiding your stops behind these in the right places will take you from here to there. And at the 110, you're still at I think you're at the 72, so you might have got taken out right there. But that's 100 pips later. And you can get in that off of 3-pip stop loss entry. That's the power of the true power of the 310 stop loss. Yeah, I mean, this is a 4 hour haul or even an 8 hour haul move. But like as Tim said, a 15-minute or 30-minute haul, once you get break even on a 5 minute, the 5 minutes that go, think about it, it's really a 30-minute wave, impulsive wave. So a 30-minute haul does really good on it at times. And it's wrapping your head around it. You're never going to catch all of the move. It's being satisfied with taking 60% of the move or 65% of the move over and over and over. Or if you're in at the bottom of the move and you got the haul on it, or get the haul on it, 77% of the move on average. Take it, move on, go to the next. All right, last chance for questions. Otherwise, we'll wrap up for the day. It's good stuff. All right, no questions. I appreciate you carving out the time to come and listen. Like I said, we will put it up in the archive as well. Do the session every week. You're welcome back. Thanks for your questions and your time, and have a good rest of your week.